Boom shakalaka, this divergence suggesting markets are about to fall off a cliff. Could Bitcoin follow and fill the CME gap down at $20,000? Or are we about to have a massive turnaround breaking a 6-year trend? Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, very interesting charts for Bitcoin and cryptocurrencies, including, is Bitcoin about to fall off a cliff or are we just getting faked out? Before we get into it, guys, make sure to like, subscribe, click the notification bell, come join us on Twitter at the Crypto Love. Push that like button. Now today, fear and greed surprisingly went up from yesterday as the markets went down. If you're confused, you're not the only one. I'm confused too. But the overall market's down 3% today. Bitcoin at 27,269, Ethereum at 1851, BNB at 323, XRP 45 cents, Cardano 38 cents, Dogecoin 7 cents, Polygon $1.01, and Solana 21.32. Now, if you want to know the best coins today, you could check out Token Metrics. There is a free trial down in the description where you could go check out the code reviews. This is actually how they picked out Polygon, formerly known as Matic, back when it was a cent before it went up to $2, 200x. So if you want to know some of the top coins, this would be the way to go. Again, free trial down in the description. Other links down there help support the channel. Now, if we take a look at Bitcoin today, we can see it has broken through this peak on the volume profile where we have the red dotted line, broken it through to the bottom. And we were saying that after it broke this support structure right here, which it did a couple days ago, the next likely level would be this yellow line, the 50-day moving average. Right now, about 26,858. Now, should it break through there, we have a couple lines of convergence. We have previous resistance at $25,000. We also have the 100 weekly moving average, the green line, coming up to those levels right around $25,000. So definitely a lot stronger support at 25 than we could expect here at 26. But what exactly caused this? Because I think this is important to know. Right now, there is a divergence on the S&P that the last time this happened, markets declined rapidly. The S&P is close to its February 2023 highs, but percent of stocks above their 200-day moving average is significantly lower. You can see prices going up and the percent of stocks above the 200 MA going down. Now, the last time this happened was way back here, price going up, percent of stocks above the 200-day moving average, and then eventually the stock market declined rapidly. So we saw a quick fall. After that, we could potentially see the same thing happening for stocks. Could that happen to Bitcoin and cryptocurrencies as well? Everybody was very, very happy when Bitcoin filled the $28,000 CME gap. But guess what? There's another one at $20,000 to $21,000 that has not gotten filled. You can see right back here. Could we be headed to that territory to fill it? Well, it's certainly a possibility. If we take a look at the Bitcoin chart, though, it would be going pretty low, dropping out of this current uptrend that Bitcoin is in for Bitcoin to break back down to $20,000. Also breaking below the 200 daily moving average once again. So, not saying it can't happen, just saying might be a little bit unlikely. As a matter of fact, what we might be having is a little bit of a cool down. If we take a look at the 3-month charts, after bear markets, we always saw strong first, second quarters post bear market. After these huge green candles, we usually find some cool down. Short and midterm still bullish, but don't expect it to go too fast. You can see 2012, 2016, 2019, 2023, that after a strong green candles, cool down period. Strong green candles, cool down. And once again, strong green candles, cool down. Well, we had strong green candles. Potentially, we have a quarterly cool down coming up. However, you have to remember, if you want to be like rich people, you should do what rich people do. Now, in terms of Bitcoin, we call these people whales. And we can actually see what they are doing thanks to the blockchain. The whales are the only group right now significantly buying up Bitcoin. You can see people holding greater than $10,000 or greater than 10,000 Bitcoin are buying at an aggressive clip after selling all the way up recently. Now, the last time they went from selling heavily to buying, guess what? That was the $15,000 bottom. So there's good chance that this might be some of the bottom down here. As a matter of fact, maybe they just want to get Bitcoin as cheap as possible, and they saw that there was a whole bunch of longs on leverage and they could liquidate all of them, causing the price to plummet, as you can see right here by this chart. And here's the leverage flush. Thanks for playing. Yes, that could very well be what happened, because guess what? They're not just whales. They're also pretty smart at manipulating the markets. How do you think they got so rich in the first place? Now, Bitcoin, where it is in the same price action as 2020. We had a triple resistance top, these 3 stars right here. We had breakout of the resistance with strong momentum and a retrace back to the support level. Now, this was right before Bitcoin rocketed off back in 2020. At this point, the best buy level since the huge bull rally followed previously. We have 1, 2, triple top, strong momentum breakthrough, pulling back down to those levels in the mid $20,000 before potentially taking off once again on the log MACD, looking very similar to 2015 on the sequence of the 3-week chart. The green line has spiked while the blue and the orange remain in the lower position. You can see that happen right here. Green spiked, blue and orange still in the lower position, and that was right before the massive rally. So we see a green spike, blue and orange still down on the bottom, suggesting this could be once again great territory. And if you're just doubtful, you have to remember that every time the RSI was above 50 on the monthly charts, the bull run for Bitcoin started, the CCI acts as a double confirmation. So we can see RSI above 50 and the CCI as confirmation about to cross, always the same. Well, likely quite the breakout will ensue, which brings us to this. Bitcoin just broke a 6-year downtrend. Now, the longer the trend, when it breaks, generally, the more significant the pattern. So a 6-year downtrend being broken could be huge. Short-term Bitcoin price action seems grim, but behind the scenes, the weekly RSI has broken out of a 6-year downtrend, is now attempting to make support. You can see this right down here. We have the downtrend attempting to make support. Bitcoin is at a decision now: continue 2019 parabolic price action or take the healthier, steady 2015 approach. You can see the last time this downtrend was significantly broken, this was right at the massive rally in 2020. So we could have something enormous on the way. But either way you look at it, you have to consider the overall grand scheme of the things. So the price of Bitcoin and the cost of production are deeply intertwined, like every commodity. Historically, buying Bitcoin when it's trading relatively tight with the median cost of production is a great bet. Basically, when this orange line is down towards the bottom, historically, these are great times to accumulate Bitcoin. We're still down very, very low. Despite the price doubling in the past few months, we're still down very, very low compared with how high it can go. So that being said, all things are looking, well, you interpret them however you want. But that's all for today's episode. Thank you so much for watching. I'll catch you guys later. Have a good one. Love you. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.
From now on, if you don't own Bitcoin, you're a moron.